IndusInd Bank has been in the news lately for all the wrong reasons.
IndusInd Bank.
Big mover in trade today is surely IndusInd Bank.
IndusInd Bank has actually taken a sharp knockdown.
मुझे ट्रस्ट IndusInd बैंक पर नहीं है.
Rumors are flying, misinformation is spreading fast, people are wondering what's happening, and many are comparing it to Yes Bank.
Government has imposed a moratorium on Yes Bank, which essentially means that depositors cannot withdraw more than 50,000 rupees.
In this video, I'll break down exactly what's happening with IndusInd Bank in the simplest way possible, giving you enough context and then separating fact from fiction. So without wasting any time, let's get started. IndusInd Bank has been in business for over 30 years now. It was started in 1994 by Srichand P. Hinduja of the famous Hinduja Group, which also owns the automotive company Ashok Leyland and the IT firm Hinduja Global Solutions. Over time, IndusInd Bank established itself as the fifth largest private sector bank after HDFC Bank, ICICI Bank, Axis Bank and Kotak Mahindra Bank. But what makes IndusInd Bank substantially different from these is their loan book. 46% of IndusInd Bank's loan book is made up of corporate loans extended across various industries. 25% of their loan book is vehicle loans, which is substantially higher than a lot of the other banks. 20% of their loan book is other retail segment loans, such as personal loans, credit card loans, home loans, and loan against property. By the way, home loans and loan against property account for just 5% of their total loan book, which is substantially lesser than other banks. For instance, in the case of HDFC Bank and ICICI Bank, this number sits between 30% and 35%. And lastly comes their microfinance loans, which is 9% of their total loan book. And this is exactly where the problem started. Microfinance is basically giving out small value loans to low income groups. The trouble for IndusInd Bank started in the second half of 2024 with rising defaults and NPAs in the MFI segment. Now, this problem was not unique to IndusInd Bank. The MFI crisis had been brewing in the economy for a while now, and it is 2024 when it hit everyone pretty badly. Let me explain what exactly went wrong. Post-COVID, there was a lot of availability of microfinance loans by banks, NBFCs, and new fintech players. As a result of all of these loans available, this segment basically over-borrowed. It was found that the average customer had anywhere between 7 to 8 loans from different financial institutions. And as a result of this over-borrowing, their fiscal prudence had gone haywire, and they began defaulting on these loans. They were not able to pay it back. What's equally fascinating is that the poorest borrowers in our country have to also pay the highest interest rates. The interest rates in microfinance loans are as high as 25%, which is precisely what makes this business very lucrative for all these financial institutions. IndusInd Bank and Kotak Mahindra Bank are two large category banks that have exposure to the MFI segment, standing at 9% and 3% respectively. So as a result of this MFI crisis, they were hit hard as well. IndusInd Bank had to suffer NPAs for which they created provisions in their books, as a result of which their profitability went down in Q2 financial year 2025, which is July, August and September of 2024. While in Q1 of financial year 2025, they reported a profit of 2.1 thousand crores after taxes, they reported a profit of 1.3 thousand crores in Q2, which is basically a decline of almost 800 crores. This hit the investor sentiment quite badly, and the stock fell 20% on that very day. The sentiment of shareholders and analysts has been low ever since, and then came the second event. The CEO of the bank, Sumant Katapalya, was only given an extension by the RBI for 1 year instead of the 3 years that IndusInd Bank asked for. Basically, in the case of a bank, it is RBI that decides the extension and the duration of the CEO position for any bank, simply because of how important a bank is to the stability of the entire country's economy. So this announcement of him only being the CEO for 1 more year also came as a dent to investor sentiment. And finally came the blow on the 10th of March. This is probably the reason why you've clicked on this video. So let's get right into it. On the evening of the 10th of March, in an investor's call, IndusInd Bank shared that they had found discrepancies of 1500 crores in their derivative positions. Let me explain what this means in the simplest way possible. Banks such as IndusInd have international operations, which means that they accept international deposits and they also give out loans in other currencies. But in the case of deposits, since IndusInd's key operations are in India, they will have to convert these currencies into INR to use it in India. For instance, let's say somebody deposits $1 or $2 million in a fixed deposit in IndusInd Bank. But to utilize these deposits and to give it out in the form of loans in India, they'll first have to convert these dollars into INR and then give it out as loan. However, at any given point in time, this individual can take the money out in the form of dollar itself, right? So they'll have to do something about the currency risk, which is basically the risk of the currency fluctuating in the same period. To manage this currency risk, the bank does something called hedging, which is creating derivative positions or basically financial instruments that will help them bear the volatility of different currencies and protect them against major fluctuations in the exchange rates. Now, please also note that these derivative contracts that we are talking about are usually long term, so from point A to point B in terms of time. And the value of these two contracts is going to be fixed over time. However, in between these two durations, there can be a lot of fluctuation in the prices of these derivative contracts. And if these positions are unwound before time, then in that case, it could mean either a profit or a loss. We now need to understand what are some of these circumstances, and it is primarily going to be pre-termination of contracts, so basically withdrawals before time. Let's say somebody created a 5-year fixed deposit, but they decided to withdraw it within 3 years itself, in which case the derivative contract's entire duration would not be used up. As a result of this, overall there are going to be a lot of complicated transactions across board. How this operation works basically is that the internal desk of IndusInd Bank, which is the one that is accepting deposits, will take a hedge from the external trading or treasury desk. Now, what basically happened with IndusInd Bank was that because of accounting errors, they overestimated their profits for 5 to 7 years by 1500 crores. They overestimated their profits. And now what they'll have to do is that they'll have to correct their mistake by booking a one-time loss of 1500 crores so that these two numbers balance out. Now, for a bank to make such a blunder is not acceptable at all, since banking as a business is based on trust. And this is clearly visible in the impact that the stock price of IndusInd Bank has had. A mere accounting error of 1500 crores has caused a market capitalization erosion of 20,000 crore rupees. Do also note that this fall is not just a result of the 1500 crore rupee loss. It is the sequence of events, starting with the MFI crisis, followed by the extension which was not given to the CEO, and then this 1500 crore rupee incident. This hit basically came at a time when the sentiment around the company was already at a pretty damn low. Say if the same 1500 crore rupee error was made by HDFC Bank, for instance, you would have not seen a similar reaction purely because of sentiment. This is the reason why it's said that stock markets are basically a voting machine in the short term, whereas it's a weighing machine in the long term. It is not for the first time that we are seeing something like this happening to a bank. If you remember, HDFC Bank, post its merger, had a decline in its NIMs. And as a result of that, the stock price fell by almost 25%, about 15-16% in a single day. This also happened during the Chanda Kocher crisis at ICICI Bank during the ICICI Videocon scam. While I might be wrong, I see this as something similar and not something very detrimental to the fundamentals of the business that IndusInd Bank really is. Now, many are also comparing it to Yes Bank. So, is it like Yes Bank? In my opinion, absolutely not. Yes Bank suffered because of the poor quality of their loan book. They were giving out very risky corporate loans which were high margin but also very high risk. By the way, I've also created an entire video on this which I really recommend you should watch. It's on the 2018 banking crisis of India. If you want to understand exactly what went wrong with Yes Bank during the IL&FS crisis of 2018, this is the video to watch. The impact they had was in the tune of tens of thousands of crores, even more than their net worth, let alone a mere 2.3% of their net worth, which is the case for IndusInd Bank. The impact on IndusInd Bank is in fact even lesser than a single quarter's profit, which is precisely why the CEO actually said that there's a very high likelihood of them reporting a profit even in quarter 4 of financial year 2025, even after taking this 1500 crore rupee hit. Mistakes were indeed made and they should not have been made. But this is not the end in my opinion. The Indian banking industry has seen and dealt with a lot worse. Anyway, these were my 2 cents on IndusInd Bank. Let me know your thoughts on the same and whether I was able to explain it well. And as always, thank you so much for watching and I'll see you soon.